Nearly every country in the world is in debt. The United States has surpassed $38 trillion in debt, the highest level in its history. The European Union holds approximately $14 trillion in debt. Japan has reached $9 trillion. Oil-rich nations and export powerhouses are also indebted. Germany is in debt. China is in debt. Saudi Arabia is in debt. Naturally, one asks, if everyone is in debt, who will ultimately receive this money? The interesting part is this. The world is not directly indebted to a single creditor. To a large extent, it is indebted to itself. But saying we owe it to ourselves does not mean everyone benefits equally. That point matters. Today, total global debt stands above $315 trillion. That is nearly 3 times the size of the global economy. How did we reach this stage? The story goes back to the emergence of the modern financial system. The idea of national debt was born long before credit cards, and not in a financial center but in war. In 1694, England was at war with France and had run out of money. The king went to merchants and offered, "Finance me and I will pay you regular interest." Those interest payments were guaranteed by future taxes. To sustain this ecosystem, the Bank of England was established. This marked a major transformation. The state could now spend money it did not yet possess. In return, financiers received a promise from the government. That promise could be bought and sold. This is how government bonds emerged. France implemented the model. The Netherlands advanced it further. The newly founded United States also financed its transformation and later its expansion through this method. Over time, borrowing stopped being a sign of weakness and became a sign of credibility. "I can borrow" meant I am trusted. In the past, empires conquered land to obtain gold. In the modern era, they issue bonds to collect interest. The battlefield turned into a balance sheet. Today, debt is a fundamental element of the global system. The United States is $38 trillion in debt. Japan holds over $9 trillion. Global borrowing increases by nearly $1 trillion every 100 days. But again, the same question, who holds this debt? Let's start with the United States because its debt is not merely its own issue. It forms the foundation of the global system. Of the $38 trillion, nearly half is owed to investors, not to government agencies but to the market. A large portion of these investors are American banks, pension funds, insurance companies, and the Federal Reserve. Roughly 1/3 is owned by foreign entities. Japan is the largest holder. China follows. Yet only a small portion of the total debt belongs to China. So the narrative that America has surrendered to China is a significant exaggeration. Most of America's debt is owed to itself. The Treasury issues bonds. Banks purchase them. The Federal Reserve sometimes buys those bonds and creates new money in exchange. The government pays interest through taxes. That interest flows into pension funds. Pension funds then pay citizens. It is a circular loop. And this loop is not exclusive to the United States. Japan purchases U.S. treasuries. The U.S. extends credit to other countries through the IMF. Europe funds developing nations through the World Bank. Those countries, in turn, place their foreign exchange reserves back into Western bonds. Everyone holds someone else's IOU. But there is another critical point here. The markets. Who buys the bonds? Which country can borrow at low interest? Which country moves toward crisis? Large investment funds, pension funds, and central banks make those determinations. Democracy chooses governments. Markets decide whether those governments survive. Central banks play a powerful role. When the European Central Bank or the Federal Reserve purchases bonds, they effectively create new money. A liability on one balance sheet becomes an asset on another. Every unit of currency in the system today corresponds to debt somewhere else. There is no such thing as debt-free money. The system has stood firmly for decades. As long as investors believe governments will pay interest, there is no issue. But what happens if trust erodes? This occurred in Greece in 2010. The government became unable to roll over its debt. Interest rates surged. The IMF and the European Central Bank intervened, but austerity policies followed. Argentina experienced repeated defaults. When Sri Lanka failed to service its debt, economic and political crisis followed. When the system fractures, creditors become visible. Yet strangely, even after crises, the system continues in the same way. Old debts are restructured, new debts are issued, the cycle goes on. Because in the modern world, government debt exists not to be fully repaid, but to be rolled over. The replacement of old bonds with new ones is called refinancing. Paying interest is the core objective. Eliminating principal is not. The United States will most likely not reduce its $38 trillion to zero. Japan has rolled over its debt for years, and it now exceeds 250% of its GDP. Yet investors remain. Why? Because government bonds are viewed as the safest assets in the world. Banks use them as collateral. Pension funds rely on them. Central banks treat them as money. If a major economy were to fully eliminate its debt, the foundation of the system would shake. Safe assets would nearly disappear. The money supply would contract. An economic shock would follow. The paradox is this: debt sustains the system. But not everyone benefits equally. Interest payments largely come from taxes. Taxes are collected from the broader population. Bonds are typically held by wealthier institutions and investors. Thus, debt has become not only an issue between nations, but also between social classes. The system has made both creditor and debtor parts of the same mechanism. Ultimately, the modern financial system has transformed debt into money itself. In the past, debt meant bondage. Today, it signifies economic order, but the entire structure stands on one thing: trust. As long as trust endures, the system functions. If trust breaks, we are reminded of what debt truly is: a promise that cannot be kept forever.